This is Sunet.
Hello, I'm Iftikhar.
Hi, I'm Vidara.
And I'm Pradesh.
Pradesh, thank you firstly for hosting us here in this lovely, beautiful country of Sri Lanka. I'm really enjoying myself here, and the high 29 degrees here is really good.
To understand what could possibly happen in 2023, we really have to rewind back to 2022. So if what really went down in 2022, what were the rates looking like in 2022 beginning, and what are the rates looking like right now?
It's a shocker, to be honest. In 2022 at the beginning, the rates were around 1%, slightly more than 1% for most people, but we were seeing rates around that mark. But 2022 has sort of changed everything. Rates have gone up from being around that to about 4.5% to 5%. So that's kind of the going rate at the moment. A lot of people are renewing their mortgages at 4.5%, 5%, and even people purchasing properties, it is going around that rate. So it's a shocker for everybody. And I can remember doing a deal for someone at 0.79% with a 199 product fee. So it was very low. It was as low as that. We found deals at 0.8%, 0.9%. Quite a few people got rates less than 1%. But they are up for renewal very soon, and they are in for a shock for sure. So all this has been part of the war, right? War has kind of put people onto this position. Financial markets are a little uneasy about this, as well as it has impacted the money markets as well. So money markets are uneasy, the Bank of England is uneasy, so everybody is uneasy at the moment. So that's what has pushed the rates up.
Ifti mentioned earlier that the rates have gone up quite significantly. He gave us the numerical figures, but the Russian-Ukraine war had a global impact on these rates. So what were the macroeconomic factors that were playing, or rather manipulating these interest rates, or the interest rate rises rather?
Yeah, so basically Russia's invasion of Ukraine led to soaring energy prices in the UK and across Europe. People saw their bills skyrocket, and it's expected to increase further by another 40%. Not only that, Pradesh, we have China with a zero COVID policy, and that means Chinese exports have taken a beating. And China being the manufacturer of the world, existing cost of goods have gone up significantly, and that's impacted everyone's standard of living, cost of living rather. And you also have Brexit. Let's not forget Brexit, although that was 4 years ago. Even today, the supply chains have not been impacted. Rather, the supply chains have been disrupted still. So all these reasons have led to inflation skyrocketing in the UK, and in July this year we saw the rate hit 10.1%, which is unprecedented, right? So across the world, central banks are having to deal with high rates of inflation, which means they're adjusting their interest rates higher to curb the rate of inflation. And in the UK, we saw Bank of England raise their rates by up to 3%, and that rate rise is expected to increase as well.
So Sunit, I know that you're into wealth management and insurance. What's really happening in the financial market right now?
As you know, the markets have collapsed, right? And they are at an all-time low. So it's not very good right now, but when I speak with investment managers, they're quite bullish. They still think there's there's chance of a good recovery. Obviously, no one can predict when that will come, but they are still bullish on their portfolios. And right now, the message is very simple. It's be patient, right? This is not going to last forever. Markets will bounce. The war will end. Certainty will return. Obviously, we are going through periods of uncertainty. That causes markets to, dip and fluctuate a bit. But that's a short-term impact. Long-term, markets are going to pick up. We are bullish. A matter of fact, if people have savings, they want to invest, it's a great time to buy actually, because markets are actually discounted, so you're getting in at the right time. Obviously, it can fall further. We don't know that, but what we do know is that they are at all-time low. So getting in now, you're buying cheap. So for everyone who is invested, stay invested. There's no need to panic. As history has shown us, there will be peaks and troughs, but we will come out of this. We will come out of this soon.
Right. So if you've got some savings in your bank accounts right now, make hay while sun shines, isn't it?
That's the message.
You're watching WIS Mortgages, Accountancy and Insurance. We're bringing it to you live from the paradise island of Sri Lanka. So don't forget to smash the like button, subscribe to our YouTube channel, and most importantly, click on the bell icon to be notified on the latest and greatest of UK mortgages. Of course, the cost of living crisis has become prominent around the world right now. How does this really look like from a mortgage point of view, especially for someone who's going for a mortgage where the commitments are going to be considered? How is it going to work out for them?
It's not really good for most of them. The cost of living crisis, to start off with, the energy prices started to soar in the Europe part mainly, and obviously UK being part of Europe has an impact because of that as well. So with the energy prices going up, a lot of other things also associated with it started going up. So when the banks realized that, they knew that the expenses were very high, and obviously the interest rates started going up as well. So with the expenses going up, what the banks decided to do is they decided to sort of make the stress test more difficult. The stress test is the internal interest rate that they calculate your interest at. Even if you pay 2%, 5%, whatever it is, they have an internal rate. So they calculated that percentage. So that percentage has actually gone up now, right? So with that going up, it put pressure on a lot of people. So that's a problem that you had. So again, with interest going up, banks have also factored that again into the affordability. So apart from the normal cost of living, they've also factored interest rates going up now as well. So together, the stress test has become even more difficult now.
Actually, that reminds me of one of our videos that we did quite recently on stress test. Many of the people don't know what exactly stress test is, or rather how it works. So if you haven't watched our recent video on stress test and how it all works, here's a card to it. Click on it and get enlightened. So 2022 has been quite challenging for many of us brokers. It has been a bit of a roller coaster actually. So what were some of the most toughest challenges that brokers faced over the past year?
Yeah, I mean, lots gone through with the brokers in the last 1 year, especially the pressure on the brokers, because the changes that was happening in the market was very, very frequent. That was one of the biggest problems that we had. We get an email in the evening at 4 o'clock or 5 o'clock saying that their rates are changing tonight, right? So if you have given the information to a client to make a submission of a mortgage application, we had to speed things up, right? Go back to the client, make sure we pick up all the documents, make sure they are 100% satisfied, and make an application. So that kind of resulted in people having to work till quite late. A lot of our staff used to work till 11 o'clock, 12 o'clock, sometimes even 1 o'clock in the night, right? Just to make sure that everything is done. And also a recent change that has happened in the market is that people now want to fix their mortgages 6 months in advance. Because a lot of the banks now allow you to set your mortgage 6 months in advance. So people who are doing their remortgages, it's always good to sort of look at it 6 months in advance. So with that change, a lot of people being so scared that the rates will change, they're coming to us and saying, look, can we do a deal now, right? So 6 months in advance, we're starting to look for stuff for people.
Actually, that reminds me of something. There was a time where we had so much of applications to be submitted. There were so many cases and we were quite overloaded. Not only us, even the lenders were quite overloaded. And as a result, we were not able to get frequent updates for our clients. And basically there was no spare capacity. So how does it look like right now? Has it been settled? Or what were the strategies they followed to kind of settle it down a bit?
Yeah, I mean, there was a lot of pressure on the banks because especially when they say they're going to change the rate, a lot of people respond to that, right? So there are days where we submit 7, 10 applications, which we would do over a week, right? So, it used to be so much pressure on us. So likewise, that pressure is felt on the bank side as well. Suddenly, an underwriter who would get 1 case that day will have 7 cases to look at. So it put a lot of pressure into the banks. So therefore, we saw that banks were getting delayed by 19 working days, 20 working days. We got approval sometimes after 3 months. So some banks took even longer periods of time. It put a lot of pressure on the banks for sure. But things have sort of settled down now because rates have slowly started to come down a little bit, at least from a bank's point of view, even though the Bank of England base rate has gone up. So with that happening, there is less pressure on the banks. But another issue that we are currently finding is some of the banks have finished their quota for the year. So because of that, they're taking less applications in. So that has sort of put a little bit of pressure on some of the other banks who we would normally not consider. So that we are kind of seeing in the market at the moment as well.
Right, so from the sounds of what you said, Ifti, there's going to be a lot of pressure. I mean, there's been a lot of pressure, and hopefully it will ease into 2023. And just to remind all of you, I know it's quite unfortunate there'll be a recession for the next 1 to 1.5 years. So it's going to be a bumpy ride. Let's all hang on tight and let's take our races, because the climate has been quite hot in Sri Lanka. But it's a really, really beautiful country that you must visit. So until then, it's Pradesh signing off. We'll catch you guys in our next video. Peace.